The end of the American empire is near. I think most of you know that, but let's talk about a recent person that said that here. And let's get into more of the insanity that is the US economy, the world economy in this case. And let's get our dose of economic reality. Let's start right here. Robert Kiyosaki, in a tweet, paying people trillions not to work is insanity. The dollar is being destroyed. The end of the American empire is near. Is war on the horizon? Our leaders are losers. God have mercy on us. And one of the first responses to his tweet was the following: a financial reset is coming. Paper money is going the way of the dial phone. Well, paper money is already in that direction, in my opinion. It's already there. Less than 10% of all money in existence is non-physical format digital money. However, before empires collapse, you typically see a hockey stick type of pattern run up in the money supply and money printing. Let's go ahead and take a look at the more recent money chart. And here's the chart out of the Fed here. This goes back about 60 plus years. And we see basically a hockey stick pattern here to the far right. Unprecedented levels of money printing. Now, does it get to the people that needed it? Of course not. If it did, there would be no one in debt. You could literally have a debt-free population if the money went to the people that actually needed it. But we know that the people that benefit the most are the people at the top, the people with the most assets that know how to use this leverage, and especially the trading firms, the hedge funds, they can trade on leverage. And the way that the money printers typically think is they give the money to the people at the top, hoping that the mega corporations and the like will create jobs for the people. But instead, what do we typically see? Stock buybacks, bigger CEO bonuses and higher pay for the CEO and the upper level executives, a bigger yacht for Bezos, and on and on and on. And it's not just me saying that. We've covered this many times here. Now let's hear it from someone who's very well established and very successful, Stan Druckenmiller. Let's take a listen to what he says.
But let's start with the Fed and inequality. I don't think there has been any greater engine of inequality than the Federal Reserve Bank of the United States the last 11 years. So hearing the chairman talk about visiting homeless shelters is very, very rich indeed. I just had the best year I've had in 15 years last year. Everyone wealthy I know is making a fortune. And why are we making it? Because this guy is printing money like there's no tomorrow. And the kids in Harlem, in my opinion, are not benefiting from money printing, but Stan Druckenmiller and other wealthy people are. So for the life of me, I can't figure out why the left is so excited about money printing when all the data says the people that benefit from money printing are rich people that know how to navigate the markets. The odds-on bet is we're going to have inflation, and inflation is going to hurt poor people again a lot more than rich people. How does this thing end? To me, the asset bubble, which he's blowing up into unbelievable proportions, busts before the inflation ever really manifests itself. That's what happened with the housing thing in 08, 09. We never really got to the inflation because the asset bubble burst. Not dissimilar to what happened in 29. That's not my central case, but let me just say, we've never had a deflationary bust because inflation was too close to zero or 1.5 instead of 2. We've had them because we've had these tremendous asset bubbles. It happened here in 29. It happened to Japan in 90. And obviously it happened in the great financial crisis. And there is no group that will get hurt more by a bust than the poor. They will be first in line to get screwed.
Okay, so interesting. There's another one that says there's going to be a bust, deflation. So instead of continuous inflation, he's talking about a bust, deflation. That means the money printer is going to have to pull back on the stunts they've been putting out there and all the massive what they call currency creation. Now, what's going to trigger it? Nobody knows. Some of you may have a few guesses. We've talked about them here on this channel many times. But think about what he said. There's been no greater source of inequality than the Fed. Him and his millionaire buddies are doing better than ever. I believe that's the phrase that he used. And runaway inflation doesn't hurt anyone except for the people that hurts the most are the poor people and the middle class. Now, deflation is also going to hurt. And yes, it would be painful, but that's how you actually fix the problem. And then you do not allow the money printers to reinflate these asset bubbles. And it's pretty simple. The cost of living comes down. You don't have to send out multi-trillion-dollar stimulus packages because the cost of living then becomes in alignment with incomes and what people can afford. Yes, there's always going to be people that don't have any income, people that cannot work or choose not to work. But things get so much easier for the working class when you allow free markets, when you allow deflation and real price discovery. Also, Druckenmiller went on to say, quote, the Fed policy is endangering the dollar's reserve status. Right now, this is going to get really insane next. Let's take a look at what the Fed has in store. What do they plan on doing? Are they going to change direction? Do they realize the error in their ways? Recent CNBC article, Atlanta Fed President Raphael Bostic, quote, the Fed's Bostic says there's no reason to change policy despite inflation fears. So they're going to continue to blow up this bubble. Now, Bostic goes on to say, quote, we are still 8 million jobs short of where we were pre-Great Sickness. Until we make substantial progress to close that gap, I think we've had our policies in a very strongly accommodative situation or stance, unquote. Now, he didn't use the words Great Sickness. I substituted that, but I think you know what we're talking about. He's talking about jobs there. Isn't it interesting that most of the jobs that are coming back are not that well-paying jobs, and a lot of people that work even full-time still have to rely on some sort of other payout or benefit just to get by, just to make their monthly payments. And how many people are still not paying their rents? Oh, by the way, it's over 10 million still. How many people not paying their mortgages? Closer to 3 million. Right? We've never seen an economy this rigged, this manipulated, this malaligned with what real prices should be. And according to Fed's Bostic, the money printers are just going to keep their foot on the gas. Where does it end? Will they pull back themselves? Or will something else cause the money printing to cease? Recent article, Wall Street Journal, inequality would widen if U.S. policies spur sustained inflation. Cost of living is rising faster than paychecks, despite efforts by the administration and the Fed. Right? It's pretty simple. It's becoming more and more well known. Most of you here listening to this broadcast right now know exactly what's going on and how to prepare. Ride the bull. Try to get some gains out of these massive asset price increases while you can. There's many forms of assets you can be putting your money in, and I would invest to make money and sell some along the ride up. Don't be greedy and never sell, because it's just digits on a screen unless you take some profits. On the other hand, have some cash. If we do see what Druckenmiller predicted, deflation and a bust, you're going to wish you had some cash. Will the bust of the dollar, or will the deflationary bust happen after the dollar loses reserve status? Well, we'll have to see. Nobody knows the exact timing on how these things are playing out. But we do know there's not much of a change in the direction that's going to change our strategy here. So we're going to wrap this up today. Thanks everybody for watching. Stay well, stay safe, stay prepared. Bye for now. Peace.